Hi, I am Kyle Anderson, and this is my wife,
Amanda Anderson.
And we bought our house in March of 2025.
Yay!
So as a first-time home buyer, we were kind of like maxed out like at that time, and we wanted something that was like move-in ready. And then as our family grew, we needed more space. We kind of just outgrew the home.
We have a 3-year-old.
3-year-old.
2 puppies.
That'll do it.
100-pound dog.
And
we need more space.
Absolutely. And in the middle of summer when it gets kind of hot, we didn't have a pool. So a pool was on the must-haves. And especially like with interest rates where they were, we had a 2.9 interest rate. So it was hard to leave that, but also necessary at the same time. With not wanting to get rid of that 2.9 rate, right? But having a growing family and the dogs and needing more space and everything like that, the pros of what a new home would have in store for us was outweighed kind of that interest rate for us at least.
Yeah.
Basically, I had to have the house. And he was going to do whatever it took to get it.
Yeah, basically. Yeah, I think that there's like a lot of like emotional kind of highs and lows. Like you think that you have all the paperwork there that's necessary to get it, and then underwriting will ask you for something different, right? Or like another piece of paper from 4 or 5 years ago. So you're kind of scrambling to find that because you don't want to be the one that holds up the process necessarily. So there's kind of a little bit of a roller coaster through it, but you just kind of make it work. So we were speaking with a local lender, like where we live, that our real estate agent typically uses, and they weren't getting us what we needed basically to buy the house that we fell in love with. We went out on a Sunday after breakfast, just a random open house, fell in love with the house, had to have it, and then it was kind of like crunch time, and we had to make it happen really fast. So we called the real estate agent. They put us in touch with the lender. The lender wasn't getting us the basically the money that we needed in order to buy the house, and I felt like we could have done more. Spoke with a friend named Derek. He referred Sarah that helped him on his house. We got a hold of Sarah, sent her all the info, and she was instantly like, yep, you're good. Go ahead and make the offer, like that day. So we put in the offer that day, and we just kind of took off from there.
But then they denied the offer.
They did deny the offer.
So then we had to go back to
and
Sarah.
And then we had to go back to Sarah and
she
figure out how to make or come up with more money. We
Yeah.
were apart by like $50,000.
And she got us there.
Yeah, I feel like I talked to her almost every single day because we drop kicked it across the finish line. Like we didn't like nudge it along.
Yeah.
So I was constantly talking to her every single day, giving her any paperwork that she needed. The initial stuff like on the app itself, like all that initial paperwork, that was all pretty easy. And then just trying to get it all through underwriting, and that was it. I think I watch a lot of stuff online, YouTube clips, things like that, where I try to like judge the market off that, which really you're never going to be able to judge the market, right? You never know what it's going to do. So just trying to make the best decision for us long term is really it. I feel like there's always challenges in any case. This one was different because we had all the money basically that we had made from the previous house. So it wasn't like we were trying to come up with the down payment. We already had the down payment. So that wasn't really an issue. It was a little unique for us because I'm self-employed this time, where the first time I was not self-employed. So being self-employed, I feel like they kind of lean on you a little harder as far as like income, because I don't show a steady paycheck every single week. It's up some months, it's down some months.
Yeah.
So it's just a little different. Because I am self-employed, the banks are, I would say more picky in some cases, or the underwriting can be more picky to what we need. But Synergy One was very easy in making all that come together for us and working with us through that, especially because I was a first year self-employed, which is also very difficult. The banks typically like to see 2 years, not 1 year. But it worked out fine and they made it happen.
It's a little more personal, but it's like,
I got big plans for this house.
like
No, I think it's our forever home. So there's just so much we can do to it. There's a lot of land. So yeah, I have a lot of ideas.
Yeah, plenty of room to grow.
There's so much. There's a whole lower lot we want to put a shop on. Chickens. We're farming chickens.
We are. Yeah, bust out the back wall, put in a 40-foot like sliding door so that it fully opens up with an outdoor living area and like a covered patio, which will then give us room to expand the kitchen.
Yep.
And create like a bar area.
Wine bar.
Because it is a very good party house.
Yeah, it is.
Yeah. Absolutely. I think that, especially the way the market has been, and I feel like it'll keep trending in that way, we can always build equity in the home, and as we need it, we can always refinance, pull equity out, HELOC, whatever it is, and also having that security of our home with our family as well.